Hi everyone, welcome to another episode of Business Juice. This month, we're going to do it a little bit different than what we've been doing in previous months. In previous episodes, we've had business owners and entrepreneurs that have come through and shared with us their experience in business, journey, and also any kind of knowledge or nugget that they have to share about their journey, about business, or even strategies within their business to help those of us that are watching. This month, I'll be tackling a question that I get a whole lot. And the question is, Tosin, what is your top 5 tax strategies that you like the most? And we'll go through them. So here we go. Number 1, I like an HSA. HSAs are my number 1 favorite tax strategies. And I'll tell you why. It's because when you put money into a HSA account, it's tax-free. When you take money out of a HSA account, it's also tax-free for medical purposes, right? So let's break it down. An HSA is a health savings account, all right? That's where you can put money into an account and save it for future medical expenses. And whenever you spend it on medical expenses, there's also no tax when the money comes out. There's not many accounts or many strategies where you have money going into an account and out of an account that are both tax-free in the ins and outs of that account. For example, a retirement account, which is my number 2, which we'll be coming to, but you put money into it tax-free, and when you take it out, there's income tax, right? So going back to the HSA, I like it because it's an account where you can put money into it. There's no time limit on when you have to spend that money, like an FSA, a flexible spending account. All right, you can keep it as long as you want. So the strategy I use there with an HSA is kind of use it like your 401k. Yes, I know there's some rules in setting up an HSA, and there are different types of medical plans, health insurance plans that qualify you to have an HSA. But let's say you did qualify for an HSA. I recommend to use an HSA kind of like your 401k, as long as you don't have medical spending, right? You can put money into that account and then let it grow. You can invest the funds inside that account because they're HSA accounts where you can actually buy stocks, you can buy ETFs and so on, right? Even if you wanted to do the Warren Buffett type of investment strategy where you buy an ETF and let it go long, right? But you make it look like your 401k account. You buy the stocks, buy the ETFs in there, and then you let it ride. It grows tax-free, and whenever we do get to that retirement age and you will have medical expenses that start piling up, you can pull that money and the growth tax-free. So that's the HSA, my favorite tax planning tool. Number 2 is going to be retirement contributions. All right, just like HSAs, like I mentioned, retirement contributions, when you put money into a retirement account, and it can be a 401k, 403b, simple IRA, SEP IRA, solo 401k. There's so many of them out there, but they're all retirement accounts, right? You can put money into those accounts tax-free. It reduces your current year taxable income, all right? But then when you do take it out at retirement age, 59 and a half or above, it will then be taxed at that point. That retirement account strategy can apply for employees and for business owners. Same thing like the HSAs for both the employee and the business owner. Number 3, formalize your side hustle. Many of us watching have some kind of side hustle we're doing, whether it's formal or not. There's something you're doing. There's something you're buying and selling. There's something that you're some kind of service you're providing, but maybe you're just not tracking it like a business. Well, it's time for you to formalize that business, because business owners enjoy a built-in tax strategy, which goes into my number 4, which is expenses. Business owners only pay taxes on the net of what they generate. So that's income minus expenses equals your net. If your net is a loss, it's going to reduce your overall taxable income. If it's a profit, at least you were able to reduce the revenues that you received by all of the expenses that you had to result in a lower net, and that net is what will now add to your income, all right? And then you pay taxes on it. Number 4, like I mentioned, is going to be expenses, expenses, expenses. Track them. There's no limit on what kind of expenses you can have, just as long as it's a reasonable business expense. That means it needs to be an expense towards business activities or towards helping you generate profits. All right. Many of the IRS rules are vague, like we all know, right? So it's all about how can you prove that this expense that you've put onto your business is going to help you generate more profit or generate revenue. And that would qualify as a business expense. A lot of people ask me, Tosin, give me a laundry list of expenses that I can do and I can add and so on. And I usually don't like doing that because that might limit them. I usually like more of that principle of whatever expenditure you are having to be able to generate revenue for your business, for you to be able to generate profits for your business. Pay for it from your business account. Pay for it from your business credit card so that it can all be tracked in one place. Now, I know many people love their personal credit card that has one points program over the other and so on and so forth, while many business credit cards mimic personal credit cards also. So therefore, you can have those same type of programs when it comes to cash points or travel rewards and so on that you would have with that personal credit card that you also enjoy. And many business credit cards actually don't even show up on your personal credit score. That's a little nugget there. All right. So that's number 4, expenses, expenses, expenses. Track them properly so that you can take full benefit of them whenever you're doing your taxes there. And last but not least, this one is going to be a little bit cheating. It's not just one strategy because I call this number 5, industry-specific strategy. All right. Not all strategies apply to everybody. It's a general strategy, kind of like the first 4 that I listed. But let's say you're in the real estate industry and you're a real estate investor and you buy properties and hold the properties. Well, we can do what's called a cost segregation or accelerated depreciation study on that property. And that's where instead of depreciating a property, let's say it's a commercial property, we depreciate those over 39 years. That means we write off the value of that property over 39 years. But what an accelerated depreciation study does is it takes apart that property and pulls it into different buckets of depreciation. So there's a 5-year depreciation, there's the 7-year, there's the 15-year, and so on and so forth, 10-year depreciation buckets. And what falls into those different things may be, let's say, like the roof of a property. The roof will not last 40 years, especially in Texas with all this hail and stuff that we've got going on. It's not going to last 40 years, but based on the study, maybe we say it's going to last 10 years. So guess what? The value of that roof, we get to depreciate it faster than the entire building at 39 years. So therefore, that equals accelerated depreciation because we're depreciating over 10 years rather than 39 years. Then on top of that, there are new rules. Bonus depreciation was passed from 2018, but it's starting to come down. But at least you can write off a majority of that cost study of those items that you're putting in the 5-year and the 7-year and the 10-year and the 15-year buckets. You can write them off all in the first year rather than waiting 10 years. So you're accelerating the accelerated depreciation already, right? So that's like a compounding tax strategy in one industry, real estate. But for the rest of you, if I missed one tax strategy that you like that I didn't mention, you know what? Leave it in the comments. Let me know. I'd love to know what type of tax strategies you like using, whether you think it's an industry-specific strategy or it can be a general strategy that anybody can use. All right, let's share. We're all about knowledge on this platform, so I'd love to learn. Thank you all once again. This has been another episode of Business Gist. Thank you for being on this ride with me. Take care and have a great rest of your day. Bye.